Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of December 30th through January 3rd of 2025. We're in part one of our weekly trading game plan. We'll try to see if Santa Claus is coming to the markets this year. So let's get started. Hope you all had a wonderful, very Merry Christmas with your families and friends and are all doing well. So here's our Google document with our notes for our weekly trading game plan for December 30th of 2024 through January 3rd of 2025. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes documents contain links to bonus videos to the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas for the trading week. We keep all of our weekly trading game plan notes, Google documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this trading week as well as previous weekly trading game plan notes documents. And you can also find a direct link to this Google Drive folder in the description box below. Welcome, Katon, Gerald Fitz. Hope you all had a very Merry Christmas and are doing well. Welcome, Walter Lyons. Hope you had a very Merry Christmas as well. So firstly, we'll see how the markets ended up on Friday, then we'll break down the major indices and the technology components. Again, try to see if Santa Claus is coming to the markets this week. As we'll see earlier, it looked like on Christmas Eve, it looked like Santa Claus was coming. And then Friday, it looks like maybe the Grinch was going to steal Christmas. So we'll again see if Santa Claus is coming to the markets this year. So again, all the indices were significantly down on Friday. Dow down 0.77%, NASDAQ down almost 1.5%. S&P down about 1%, had 78% decliners, only 18% advancers. We've now got 69% below their 50-day moving average, only 31% above, and we've still got about a 50-50 split, just slightly over 50% below their 200-day and slightly less than 50% above. So again, Grinchy day, bearish day on Friday. Again, heat map, almost all red, Mag 7, probably a lot of profit taking in the Mag 7s. Again, almost all red in all the sectors. We'll look at some of the news. Bank bull run seems thundering onward. Housing market should pick up, but choppy in 2025. Santa Claus rally is here, but can the stock market avoid the Grinch pinch? And that's what we'll try to figure out. Trump's first actions and job data to test market in January. Dow falls but breaks 3-week losing streak. Again, we saw the decline in the markets. Oil has been pretty oscillating right around 70. Got good support around 70, bouncing off around 72 resistance. Natural gas we'll see trending upward, but choppy, volatile. Gold's range bound between 2600 and 2650, so it's bouncing off 2600, hitting resistance at 2650, rejecting. And we'll see all the indices pretty sharply pointing down at this time. Bitcoin's been pretty range bound between 90 and 95, so pretty good resistance at 90, or support at 90, resistance at 95. Again, we saw bond yields surging upwards. Now we've got the 30-year up over 4.8, 10-year up over 4.6, and the 5-year at 4.45. So bond yields steadily upward, bond prices steadily downward. Welcome to Crow. Thank you for joining us. Sydney Osborne, good to see you. Hope you all had a very Merry Christmas. They're doing well. If we look at a breakdown of the major indices, see the Dow rejected, guy had a pretty good bounce and then rolled over. Looks like it didn't quite reach that 50-day moving average, rejected downward. So it looks like it's trending back downward to that support area. IWM, again, we saw that strong decline, found a bottom, bounced up a little bit, got rejected, back down to that support trend line. Qs pretty much oscillating around that lower support line. Again, it's got significant downside to the 50-day moving average. So again, more potential downside in the Qs. S&P, you can see it made a bottom, bounced pretty strongly back up over its 50-day, then retraced right back to the 50-day moving average. So we'll see if that 50-day will hold or if it's going to break down further, retest that previous low. Look at a breakdown of the technology components. Again, just a quick reminder, you can access these screeners in our notes documents, also in the screener sheet of our ETFs and Watchlist Google Sheets. I don't know if I saw Balu Dog. I think he was the one asking about SQQQ. Talking about our technology component screeners, so you can always access these. We look at the TQQQ, so if you're looking for an entry point short in the TQQQ in the NASDAQ, we look for entry points using the leveraged long, which would be TQQQ. So we see again the NASDAQ came down, made a bottom, pretty reflexive bounce back up, and then came rejected right back down. Again, more potential downside. We can see that the 50-day is coinciding with that lower trend line. So again, probably good support right at that 80 mark. But again, I wouldn't be surprised to see it come back down and retest that trend line. Again, we can look at all the other technology components. See ARC had a quick bounce and then rejected, a lot of potential downside in ARC. So if you want to short ARC, you can use SARC. Again, congratulations to all of our BeachBum traders who are collecting that juicy end of year dividend on SARC. So if you're already long SARC, I believe it just went ex-dividend with their yearly dividend. So again, congratulations to anyone that captured that. Again, looks like there's plenty of potential downside in ARK-K. Bang's a lot steadier. Again, buy the dippers in the Mag 7s, window dressing in the Mag 7s, came down, made a bottom, bounced, got rejected, but again, a lot of potential downside. Again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. But in my humble opinion, I think we probably see again some more window dressing maybe in the last couple of days of this year. And then I think deferred profit taking in the Mag 7s and the FANGs early next year. And then we'll talk about rotation in from leaders to laggards, laggards to leaders, probably starting next week. But again, I expect the trend in the Mag 7s to continue to be up until early next year. And then I think we've got some significant potential downside there. Semiconductor's been pretty flat, again, getting resistance from the 50-day moving average, getting a little bit of support from that lower trend line. But again, a lot of resistance, pretty flat. Very negative in biotechs. We talked about all the negative factors in biotechs, but it does bounce occasionally. Went up to that previous low, got rejected, back down. Again, a lot of factors driving biotechs down. Broader technology, again, pretty flat. It's got support from the 50-day. It's got resistance from these trend lines. So again, just kind of oscillating between that narrowing channel and around the 50-day moving average. Again, I expect it to be generally pretty flat. We look at a breakdown of the groups, sectors, industries. So everything pretty red from Friday. Energy was flat. Utilities, the least negative. Most negative, technology, real estate, again on higher bond yields. Consumer cyclical. However, for the week, technology, energy, financials, real estate, all positive. The only negative for the week was consumer defensive. So although Friday was a pretty grinchy day, um, the week, was pretty Santa Claus rally oriented day. So mostly positive for the week. For the month so far, though, only communication services, cyclicals, and technology positive. Most negative, basic materials, energy, real estate. So again, increase in bond yields, strong dollar. So those sectors got hit. Next week, after the year ends, we'll look at again rotation from last year into the next year. So we'll be looking at the yearly performance of sectors and industries for the year and looking for a rotation from laggards to leaders, leaders to laggards. So again, we'll probably focus more on that next week. And if we look at a breakdown of industries, mostly negative, a few coal and oil on Friday, again, mostly negative. Most negative, silver, REITs, semiconductors, biotech, electrical. For the week, however, pretty good. Solar rebounded, again, very volatile, although higher for longer interest rates, generally negative for solar. Semiconductors bounced a bit. Oil, some REITs. Gold a little positive, silver a little positive. Uranium slightly negative. I did want to pop this open. Been watching the uranium stocks. Look again, we've been watching them cycle back down, waiting for them to kind of cycle back down to their previous lows. And again, we'll be interested in a number of the uranium stocks. I know a lot of people like CCJ. We like DNN, LEU, URLI. So again, we're just kind of waiting for. It looks like UROY is getting close. So we're just kind of waiting for those to cycle down, and I'm keeping an eye on the uranium sector. So again, next week we'll look at the yearly performance and look for some sector rotations from laggards to leaders from the yearly bars that we get. So I hope that all helps. Welcome to Ricky Khan. If I missed you earlier, hope you had a very Merry Christmas and are doing well. Michael Marchese, thank you for joining us. I don't think I've seen you before. I hope you had a Merry Christmas and are doing well. So next we'll look at, the economic data was pretty sparse from last week. It will be over the couple holiday weeks, but let me grab a drink and we'll look at, okay, it looks like they're down. Right now, I'll try them again in a second. Let me go over our notes. For the highlights, just a quick reminder, as the important economic data comes out, try to capture it. Important economic news, I try to capture it as quickly as possible. Post it in the Surf the Markets channel of our Discord. Our Discord is free to join. Find a free invite in the description box below. So you can see as the important economic data comes out, try to capture screenshots of raw data. Also, again, any important economic news. So our Discord's a great source for real-time economic data, real-time economic news. We also have many channels to discuss trading different asset classes, different trading styles. So you all can hang out 24/7 and chat all things of trading with whatever asset classes and trading styles you prefer. So we'd love to have you join our Discord. Again, free to join. We'd love to have your active participation there. So let me grab a drink, and again, we'll go over the highlights of the economic data from last week and look at the upcoming economic data for next week. Okay, not a whole lot. Beginning of the week, Again, markets closed at 1 p.m. on Tuesday for Christmas Eve. Again, Tuesday the 24th was technically the first day of the Santa Claus rally, and we did see a positive close on Tuesday, so it looked like Santa Claus was coming to the markets this year on Tuesday. Markets were closed on Wednesday for Christmas, so again, I hope you all had a very Merry Christmas. Thursday, we got jobless claims data. Initial claims was a little light, so a little less than expected, so the job market continues to be relatively resilient, although continuing claims is higher than expected. So people that were previously jobless are having a little bit harder time finding jobs. So some discrepancy between openings and jobless people. Again, the 4-week average creeping up a little bit. So again, some discrepancy, some divergence in those looking and the current open jobs. But generally, again, the job market's resilient, so the Fed doesn't have to worry about that in terms of cutting interest rates further. Nothing additional on Friday. Again, just a quick reminder, market is open a full day on Tuesday, the 23rd, New Year's Eve day, but it is closed on New Year's Day. And then our Santa Claus rally would technically run all through next week into Friday the 3rd. So it's the last 5 trading days of the previous trading year, first 2 trading days of the next year. So again, all of the next week is our time to see if Santa Claus is coming to the markets. And again, Friday then is the last day of the technical Santa Claus rally. So after that, we'll see if we got a Santa Claus rally in the markets this year or not. So let's see what other economic data there was last week, what's coming up for next week. Welcome, MD Fairchild. Thank you for joining us. Hope you all had a very Merry Christmas and are doing well. Okay, so we got durable goods orders a little weak. Building permits, again, a little less than expected. Again, high bond yields, bad for the housing sector. Higher for longer, bad for the housing sector. New home sales, again, weak. Again, we expect the housing sector to continue to suffer from the higher for longer and the high bond yields. That auction was a little weak. So again, we saw bond yields up, prices down. Talked about jobless claim data. Wholesale inventories up a little bit. There was some discussion that people probably loaded up before the Trump tariffs. Natural gas storage down. But again, the trend in natural gas prices went up. Oil inventories down significantly, although again, oil's been pretty range bound around 70. Baker Hughes rig count steady. So we'll see what we've got next week. Again, probably pretty light with all the holidays. Got PMI, pending home sales on Monday. Tuesday, housing prices. Again, all the housing data, in my humble opinion, will continue to be weak. Wednesday, again, markets are open on Tuesday all day, closed on Wednesday for New Year's. And we hope you all have a wonderful New Year's Day. Mortgages. Again, I expect mortgage rates to be up. We'll get ISM manufacturing. We'll see if there's further slowdown in manufacturing on Thursday and Friday. So again, not a whole lot of economic data to jar the markets further to derail a Santa Claus rally for next week. See if we've got any earnings. Probably not a whole lot. A little bit, so you can check if there's anything that's significant to your trading. And should be pretty much done for the year. Yep. So pretty light. Again, reminder, the next FOMC meeting is not till the end of January, so we're not going to get any further cuts or even know if they're going to hold. Again, we looked at the probabilities after their cut in December last week. Probability is for a hold at this time. Okay, let's quickly look at the market screen in Webull. Just a quick reminder, you can now trade 24/5, 24 hours overnight trading in Webull. You can get more information about 24-hour trading in Webull via the link to our video in the notes, and also in our Discord posting via the link in the notes. So we can see the histogram. This is in the online browser version of Webull on the market screen. So we see many more decliners and advancers on Friday, although the percentage of decline is very small, like almost a 3-to-1 ratio. See, the NYSE was negative until around 1 o'clock and then went slightly positive for the day, or the NASDAQ steadily down until pretty much market close. Got a little bit of a bounce, but a lot of outflow out of the NASDAQ. Again, looked like profit taking out of the Mag 7s. Look at the fear and greed gauge. We can see we're slightly into fear. Previous week was fear at 31, so right now, or previous day was neutral. We were greedy a month ago, so if we look at the history, see we kind of this past week, we peaked out on New Year's Eve, so it looked like we're going to people prepping for the Santa Claus rally, and then Thursday, Friday got a little bit more fearful, but we're not as fearful as we were on the 19th. Look at a longer chart. It looks like right now the 19th was the low. The high was early December. Again, you can also see the earnings calendar and the calendar widget in Webull. We look at the best performing industries for the week. Hardware, software, semiconductors, renewable energy, looks like solar, oil and gas services, natural gas, some computers, some biotech. Biotech pretty positive for the week. Oil and gas, some REITs, defense, healthcare, generally positive. Okay, ETFs. So right now, short the Russell, short NASDAQ, short small cap. So pretty negative from Friday again. Short the Dow, short the S&P, short the NASDAQ. Up on the VIX. See the VIX did bounce back up a little bit. Short Bitcoin. We'll talk about this BTCZ. This is a new short on Bitcoin. We'll do our research on that one today, hopefully. Can short the Russell, short small caps. Nickel positive, uranium. Healthcare pretty negative. Financials negative, utilities. Again, from Friday, almost everything negative, a little positive in energy. Natural gas. High yield. Okay, let me grab a drink. We'll also talk about futures. Just a quick reminder, if you're not already using Webull, you could still get up to 40 free fractional shares of stock by opening and funding your account with as little as $2,000. Each fractional share worth $3,000 to $3,000. If you fund it less than 2K, you can get 20 free fractional shares of stock. Also, if you use our affiliate link in the description box below, you can get your free fractional shares of stock, also any other promotions that they're currently offering. And you can also help support our BeachBum trading community, which we greatly appreciate. Also, you can now trade futures in Webull, so you can get more detail about trading futures in Webull via the link to the Discord posting in our notes. We look at the futures in FinViz. See, we had that, rebound, strong downtrend, slight rebound, and then again, Thursday, Friday, slightly negative. Looks like again more downside. Probably, potentially retest that previous bottom in the Dow. Less of a correction in the S&P. Looks like it rejected off 6,100. Got support around 6,000. But again, looks like we might get a retest of the previous low. Similarly with the NASDAQ, bounced up a little bit over 22,000, rejected. We'll see if it gets to, looks like it almost tested that support at 2150, bounced back up a little bit, but again, they all look like they're trending down to the next support level. Again, much more negative in the Russell. Got rejected off 2300. Looks like it bounced off 2250. So got some support, but again, potentially more downside down to 2200 or so. Nikkei bounced up. We'll see the yen weakening. Euro stock looks like it flattened out a bit. DAX, a lot of turmoil in Germany, so it rolled over. Again, we see that bounce in the VIX at 16, so pretty strong bounce. Didn't quite make it up to 18. Corrected back down. Let's look at the VIX term structure real quickly. So again, just a quick reminder, you can find the VIX term structure in the links section of our homepage, beachbumtrade.com. So if we go down to the reference links, we can find the VIX term structure. We'll see currently the VIX is below 16, but it's also significantly below the futures. So the January futures is almost 17. Then we've got a steady uptrend going through the first half of the month. So we've got a pretty steady contango for the rest of the first half of the year or so. So up potentially more upside on the VIX. We look at the historical prices. Again, today and tomorrow or yesterday about the same. We can overlay the term structure. So again, more potential upside, I think, in the VIX. So we've got a number of long ETFs to trade the VIX, like UVXY, like UVIX, etc. Again, congratulations to any of our BeachBum traders that caught that bounce in the VIX. And we see when it did spike up, pretty steady, strong downtrend. So again, you can trade short the VIX, SVXY, SVIX, etc. If you're nimble, good. Shorting the VIX is one of my favorite trades, but I can't catch those real nimble bounces. Talked about oil, again, been pretty flat, oscillating around 70, 68 to 72. So pretty stable range. Again, trade that volatility, gush and drip, but it's not a strong trend right now. Do have a strong upward trend in natural gas with a lot of volatility. I'm assuming this was a futures contract rollover, so it did kind of gap down. Looks like it's trending back up. Again, strong long-term trend. If you're nimble, you can trade the volatility with boil long, KOLD, cold short. Again, gold, pretty strong support around 2,600, pretty strong resistance around 2,650. So again, you can trade these with some of our ETFs, GDXU long, GDXD short, And again, make some good money trading that volatility. Again, these support resistance levels look pretty strong right now. Similarly with silver, support around 30, resistance at 31, also support at 29. So it does look like it's going to roll over and retest the previous low. Probably similarly on gold will probably retest 2600 again. Some of the agriculturals are up, like corn. Some are heavily down, wheat or rice, oats. I looked for an ETF to long that was specifically focused on rice, couldn't find one. So if anyone knows of an ETF to long or short rice, please let me know. Otherwise, when that bottoms and turns, might be a potential good futures trade. If you trade the futures, get all its way down too. Grab a drink a sec. Watching wheat, looking for an opportunity to catch that swing back up. I might have missed it. Looks like it might already be swinging back up. You can trade wheat long with the WAT ETF. So we'll be seeing if we can get a retracement. Also, while we're looking at this one, I wanted to share with you the WEAT ETF. Well, let me come back to that. Let me go through the rest of these, and we'll come back to wheat. So cocoa, orange juice rolled over. Lumber looks like a gap back up on a rollover. Sugar's down. So again, we see a steady decline in bond prices. Again, bond yields are way up. The bond yields are now higher than they were before the Fed did their first 50 basis point cut, which again, in my humble opinion, is somewhat irrational. So I'm looking for a swing back up in bond prices, decline in bond yields. Not to say it's possible that the 30-year might hit 5% again. We'll see. The trend is strongly down on prices, up on yields. But again, the fact that it's below the level that it was when the Fed first cut 50 basis points seems a bit irrational. So we're looking for bond prices to swing back up, bond yields to decline, probably find a stable point somewhere, hopefully in January or so. Yeah, dollar's been pretty flat, pretty stable right around 107, 108, but a lot of the foreign currencies are heavily down. So again, potential opportunity if you're a Forex trader, you might look for a reversal swing back up in some of these foreign currencies. We're looking for a swing back up in the yen. See it trended back down. Although if I look at that chart very quickly, so it's not quite to the bottom before we had the first BOJ interest rate hike, and we got that first unwind of the yen carry trade, but it is trending downward. So we're watching YCL. We'll talk about that tomorrow, which is a leverage long on the yen. Again, it may retest that previous low before the first BOJ rate hike and the first unravel, but you can see the potential upside, and there is the potential. The BOJ held rates in December. I think the speculation is they may raise again in January, so we might get that unravel again of the yen carry trade potentially in January. So again, that's a opportunity we're watching. Again, a number of these other foreign currencies might also be attractive. So if you're a Forex trader, you want to trade it with ETFs, we do have some ETFs in our Google Sheet. I can show you where to find those if you're interested in foreign currency trading. So now I want to quickly go back and look at wheat. WEAT was the impetus for me looking for a way to see futures, future contracts on these futures. If we look at WEAT, and we've been watching that for a swing back up. I wanted to see what it was comprised of. So you see WEAT, this ETF on wheat futures is on the May, July, and December of 25 contracts. So it's about 30% of the December, or that's next December. So May, July, and December contracts. So I wanted to try to see if we could find where the bottom is on those. I don't really know why they have things like L3 Harris and Harley Davidson in there, or if that's a mistake. So I found this site, Bar Chart Futures, where you can see the various futures contract for various months. So I also put this, the link, it's in the notes. I also put it in the reference links on our homepage. So now you can also find this futures contracts prices in the link section of our homepage. You can see on the main page, you can see the main futures. So an overview of all the indice futures, 10-year treasuries, major commodities, oil, natural gas, gold, silver. You see the March contract for wheat, but I want to see that May, July, and December. So if I want to see all the different contracts for wheat, select a commodity. You can see we've got all kinds of different commodities, wheat, corn, etc. Also the energies, oil, natural gas, metals, agricultural, softs, also the foreign currencies, so including Bitcoin, etc. So again, not strictly just commodities. So you can see different contract futures contracts for various commodities. So if I want to look at wheat, now I can see the trend in the May, the July, the December. We can see all three of those were up. So not surprising, the WEAT ETF bounced up. You want to zoom into a chart for any of these futures contracts. If you go to the link section, go to interactive charts, you can see you can get more data, you can get a quote overview, options, etc. If we want to look at a chart for a specific contract, and now we can zoom in and see, okay, what's the May wheat contract doing? And again, it looks like in the May one bounced off 540, trending up. And if we want to look at July or December, which is also 30% of that, look at the July. So again, that one bounced around 550 or so. So again, I thought that was a useful tool. If we want to see, is wheat at a bottom? Is this double bottom where it's going to bottom out? Or we can see the 52-week low is at 465. So maybe that's the bottom, and maybe that's where we should be buying. But again, we can investigate that with the futures contracts of which it is comprised now using this bar chart tool. So again, you can find this. I also added this in the screeners sheets of our ETFs and Watchlist Google Sheets. So plenty of different ways you can find the link to that. Check out the futures, be it for wheat or any of the other futures-based ETFs. So let me know what you think of that. Have any of you previously used this bar chart tool, futures tool, etc.? Let me know what you think in the comments in our Discord, etc. So I hope that all helps. So let me grab a drink, and I think we'll jump forward to our theme for this week, and then I'll come back to ETFs. So if there's a specific ETF topic, commodity, index, etc., for which you're looking for ETFs, the long or short, you can let me know in the chat. We'll come back and try to take a look at those. Okay, again, our theme for this week is trying to see if the Santa Claus is coming to the markets this year. Are we going to have a Santa Claus rally this year? Again, just a reminder, technically, the Santa Claus rally started on Tuesday, New Year's Eve, the 24th. So it's again the last 5 trading days of the current trading year, the first 2 days of the next trading year. So it ran New Year, Christmas Eve, the 24th, will run through Friday of next week, January 3rd. So we'll try to see if we're going to get a Santa Claus rally again on New Year's Eve. It looked like people were prepping, front running the Santa Claus rally. We had up day on Tuesday, and after Christmas we had 2 down days. So still a little bit indecisive. But again, we've got all next week to see if we're going to get a Santa Claus rally. Santa Claus rallies, just if we have some uptrend during that time period. Again, if you're not familiar with what the Santa Claus rally is, if it's real, what does it mean? We've got a link to the video that discusses Santa Claus rally in more detail in the notes. Last year, we got, in my humble opinion, we got an early Santa Claus rally, and then we could see, what happened after that. So you can hear that Santa Claus rally came earlier this year. Also discuss some things in our notes from last year, so I want to look at those. So again, you can find a link to the notes both in that previous video as well as in our notes for this week. So we can look at our strategy for last week. So here's a brief definition of the Santa Claus rally from Investopedia.com. And we talked about if it's real, what happens if we don't get a Santa Claus rally. Also, we've been talking, we're probably going to get some last minute end of year window dressing, although most of your money managers, fund managers are probably already gone. You might see some last minute window dressing. In my humble opinion, again, I think that'll be buying the dip on the Mag 7s, on the FANGs. Also, we've got a short on trading during holiday hours, so I hope that all helps. Also, we've been talking about trading in December, and one of the factors we've been talking about is tax loss harvesting. So again, we might get some last minute tax loss harvesting, although again, Monday with T+1 settlement, I think most of the tax loss harvesting has probably already occurred due to the wash sale rule. So if you're not familiar with tax loss harvesting or the wash sale rule, you can get more information about those via the links in our notes. Again, I think most of that's probably done. So most of your downward pressure on your small caps, etc., is probably mostly done. And we may see a rebound in the end of next week, which is the start of January. We might also see further profit taking after the first of the year. Again, if people want to defer the taxes on their Mag 7 gains, on their Bitcoin gains, etc., they could just wait until the January 2nd, take their gains at that time, hopefully thinking that Trump will cut taxes, and therefore they'll have less of a tax on their gains next year than they would this year. So again, a number of factors that could drive more selling early in January and more buying of things, tax losers, big losers from last year at the end of this upcoming week. So again, some strategies to watch out for going into this trading week. So probably next week we'll start talking about January. We'll talk about the January effect, and then towards the end of the month we'll look at the January barometer. But again, you can get information on what those things mean. The January effect, the January barometer, what that means. You can also hear our previous assessment from 2023, 2024, see how those played out for the end of those years. Was the January barometer accurate for those years? And also, if you want to get a preview of how the stock markets perform in January and the best performing sectors and industries in January, we've got those links in the notes too. And again, we'll probably start talking more about that next week. And then we've also have links to the trends, the historical trends, and how to make money trading in the winter. So again, plenty of material. If you're bored during the holidays, please watch our videos on all these topics. Prepare for our future weekly trading game plans. So, okay, let me go back to ETFs and let me check the chat, see if there's any ones in specific people want to look at. Let me grab a drink and we'll look at ETFs. Okay, so as we come up with our trading strategies, our trade ideas, be it long or short, then we like to jump over to our ETFs Google Sheet, and we can find ETFs to trade that trade idea, that trading strategy, again, be it long or short, in our ETFs Google Sheet. Again, you can do the same thing, and you can get 24/7 access to our ETFs Google Sheets, as well as our other Google Sheets by joining our Patreon. So again, as I mentioned earlier, I've got one new addition that I found that we wanted to do research on. This is another short. It's a leverage short on Bitcoin, BTCZ. So we added that to our research sheet, see how that compares to other shorts on Bitcoin like BITI, SBIT. So if we go to our research tab, do the find on BITZ, so you can see we've got BITZ and SBIT in the research tab. Also, we're going to want to compare that to BITI. So Bitcoin down, BITI, which we have in our main sheet. So you can see BITZ, it's 2x inverse on Bitcoin. See, currently it's kind of in the middle of its range. You can see it's got a pretty nice risk reward profile. So it looks like it hasn't been around for very long. So we'll take a look at the chart in Invis in a second. You can see a pretty nice risk reward profile, a little bit better than SBIT. So if we look at BTCZ and Finviz, again, 2x inverse daily on Bitcoin. Yeah, we can see it hasn't been around real long, just since July, obviously trending down since Bitcoin's been way up. Looks like they just paid a end of year dividend, very small. So relatively new, only 6 million AUM. Volumes, not too bad, but relatively low. Very small dividends. Obviously, the performance has been negative. Look at their definition. So daily investment, 200% the inverse opposite of the daily performance of spot Bitcoin. So again, this is on the spot Bitcoin, which is in contrast to BITI, which is on Bitcoin futures. I believe SBIT is also on spot Bitcoin, although I believe they have a kind of a proprietary index. So here's SBIT, another short on Bitcoin. So that's also 2x inverse of the daily performance of the Bloomberg Galaxy Bitcoin Index. Single Bitcoin traded. So again, this is a spot Bitcoin, current Bitcoin prices, whereas BITI is on the Bitcoin futures. So if you want to trade short spot Bitcoin, you can compare again BTCZ to SBIT. See, it looks like BTCZ's got a little bit better risk reward profile than SBIT, and we've done previous analysis on SBIT versus BITI. So if we compare that to BITI, again, this is on the short on the futures. So you can see that BTCZ's got an even better risk reward profile than BITI, but again, depends if you want to trade spot Bitcoin or Bitcoin futures. So we've also got longs, BITO long, and then got a couple other longs, BITX, and then also on the miners. So again, a series of ETFs in our ETF Google sheet that you can trade Bitcoin, either spot Bitcoin or Bitcoin futures. So I hope that all helps. Please let me know if anyone's used BTCZ to short Bitcoin, if you're currently using BTCZ or SBIT or BITI or the longs, BITO, BITX, WGMI, etc. So again, you can find all these, compare the risk reward profile, see their current performance. Again, look at their composition, ETF in the FINVIS profiles and the ETF database using our ETFs Google sheet. So again, if anyone, I'll try to keep an eye on the chat. I'll spin through some of the other ETFs. But if anyone in the chat has another one you want to look at, if I missed your ticker or your theme, please put it back up. And I apologize for missing it. Again, we've got all the tech sector, longs and shorts. So biotech, LabU long, LabD, again, ARK and SARK. Watching MJ, we've been talking about that, looking for possibly a swing back up early next year. And China, yin and yang. Keeping an eye on these coal ones, see if they come down, still not quite at their 52-week low. Again, the FANGs, FANG U, FANG D, although again, I think the trend until beginning of the year will be up, and then we might see a rollover in the MAG 7 rollover in the FANGs. With some of the ag products down, I thought DBA might be down a little bit more, but it's kind of in the middle of its range right now. Not a whole lot of risk reward profile. Again, gold, you can play that volatility, those bounces, GDXD short, GDXU long. Well, we've got several other options we've talked about. Again, as if Baloo Dog, if you want to see where SQQQ is and track it, see if there's a opportunity there, you can track that in our ETFs Google sheet and see right now. Again, kind of it's a little bit above its support level. So NASDAQ's rolled over a little bit. If you want to play the momentum down, again, SQQQ still got a pretty good risk reward ratio there. Again, natural gas long-term trend is up, but very volatile. So if you want to trade the short-term volatility, oil long, cold short, want to trade the trend, UNG or UNL long. Crow's mentioning NVDQ, which is another single stock on NVIDIA. Let me see if we've done research on that one before. VDQ. Yep. So you can find that one in our research tab. So that looks like that's an NVIDIA short. Got several NVIDIA longs. So again, we've got a number of single stock ETFs, long or short. You can find in our ETFs Google Sheet, either in the main page or again, as I just did a search in the research tab, so you can see where MVDQ is. So you can see the risk reward profile, current performance, and again, long or short NVIDIA, different amounts of leverage. So find the one that you prefer. So it looks like this NVDS, though, might have a better risk reward profile. So again, oil been pretty steady, but you can trade gush and drip. I'd love to get a dip in oil. Been watching USOI. I'd like it to come down to at least its 52-week low, and that's a monthly dividend payer on oil. Again, short the Russell or long the Russell. Again, in January, I wouldn't be surprised if we got a bounce in the Russell. So we might, if you're a short-term swing, etc., might wait till early January, swing back up in the Russell. Silver, long AGQ, short CSL. Tesla, again, we've got single stock ETFs, long or short Tesla. Also, the Treasury bonds, we saw how Treasury prices have significantly decreased. We're already long TMF, which is leveraged long on the 20-plus year. It's looking at some of these shorter terms. So here's the long on the 7 to 10s. Looks like the risk reward profile on that's pretty good too. And it's pretty close to its 52-week low. So I might want to start looking at a long a TYD as well, which is again the 7 to 10-year treasuries. So I'd also looked in our research sheet on treasuries. So again, you can find all the ETFs we've looked at in treasuries. So we've got TBT down. Also in our ETF database tab, you can search for treasuries. Also, I wanted to show you the foreign currencies. So you can search for foreign currencies or currencies. So asset class currency. And if you're looking to trade Forex or ETFs to trade various foreign currencies, we saw a lot of them are down quite a bit. So it's like the Swiss franc's got a pretty good risk reward profile right now. Bitcoin. Yeah, looks like Swiss francs are the only one really showing very attractive in terms of risk reward profile right now. Again, if you're looking for ETFs to trade various foreign currencies, you can also find some in the ETF database tab of our Google Sheet. Specifically, we're looking at YCL. Again, trade the yen. It's been declining. A little bit of a bounce back up. Not a huge risk reward profile. The swing, 40% upside on near terms, pretty good. And then if we go to the top, we assume the yen is going to continue to go up once that yen carry trade unwinds. They keep raising interest rates in Japan. We can swing that trend, even farther than the 52-week rate. So, we're going to be watching YCL. If you don't want the leveraged ETF, you can use FXY. Again, not as good of a risk reward profile as YCL. If you think it's going to keep going down, or you want to trade the volatility, YCS short. We talked about we're watching wheat bounce back up a little bit. So we'll see if we get a slight correction, catch that wheat around 466 or less. In trading volatility, we saw a bounce up in UVXY, trade along UVXY, VXX. You can catch the peak and the correction, short SVXY, SVIX or SVOL. SVOL is a monthly dividend payer, short on the volatility on the VIX, so we're watching those as well. Okay, if I missed your question or your topic, or if there's an ETF you'd like us to do research on, you can put those in the comments to our video or in our Discord. Again, please tag us in our Discord so we are aware of the question. We're BeachBum Trading, all lowercase, no other characters, symbols, numbers, etc. Anyone else is an imposter. So again, if you have any questions, want us to look at any additional ETFs, etc. If you want us to look at individual stocks for a part 2, appreciate it if you put it in the comments to a video or in our Discord. Also, we really need your feedback as to what can we do to continue to improve our weekly trading game plans, any of our other videos, our tools like our ETFs Google Sheet, our other Google Sheets, etc., our Discord, our community. What can we do to help you make money trading, help you succeed in your trading career, and continue to build our community and continue to add more value for all of our BeachBum traders. So thank you to everyone who participated in the chat today. Anyone watching after the fact, we hope you like this content. Please smash the like button on these videos. Help us try to get the YouTube algorithm to show us some love someday. And share our content with more traders, build our trading community. We greatly appreciate it if you directly share our content, repost our content on your social media sites. I'm pretty lousy at sales and marketing, so I really need help from those who are better in social media in general. So I really need help from those that are better at those aspects to help us continue to build our BeachBum trading community. So thank you again for your participation and for watching. We hope you all come back for part 2 of our weekly trading game plan for the last trading week of 2024, first trading week of 2025. We'll see if Santa Claus is coming to the markets this year or not. And we'll use our strategies, our market analysis, our trade ideas to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Also talk about how we can use dividend payers and various option strategies to generate income while we wait for our swing trading stocks to set up. So we hope to see you all back tomorrow, 10 a.m. on Sundays for part 2 of our weekly trading game plan. If we don't see you, we want to wish you a very happy new year, very prosperous new year. And again, we hope we'll see you again tomorrow. Have a great day.